check, mic check. Well, that was frustrating, y'all. Uh, Boy, if it in one thing, it's another this morning. I think that's probably half the problem I'm having is, um, I'm using my MacBook Pro. I'm normally on a different computer when I'm doing this, and it's probably the root cause of all my technical difficulties today is just hopping in and using a different computer. And so I think I got audio working now because I closed my lid and that killed my microphone. So lid's back open. Looks like we got microphone now. What I was really hoping to do this morning was do more Q&A with people. So please, if you do have any questions, like no questions are stupid questions. And if anybody thinks it's a stupid question, don't you dare say so in chat because it ain't. I promise you it's not. So if anybody has questions, great. Yeah, Brew and the never-ending saga, technical difficulties. He's so right, bro. He's so right. Like I'm happy to just do some TA. I'm happy to like kind of go back over, some of the stuff I've posted, see how that sort of panned out and whatnot. Happy to do any of that stuff. But would really love to do some Q&A. One thing I do want to talk about is, I guess, whatever. Like I am still long on this, and unfortunately, during my technical difficulties, as we were approaching target one, I did not peel any profits. And that whatever it is, what it is. Overall, this still doesn't look absolutely hateful to me to come up and tackle a high like that, anyhow. So. Just a quick look at the market structure and managing risk. I know a lot of people get wrecked on that wick yesterday. Yeah, I'm sure a lot of people did get wrecked on this wick yesterday. But let's talk about let's talk about the market structure and yeah, let's do that real quick. Let me see if I could probably get away with leaving this on the 2 minute. So Thursday, right? Thursday we're up here. Yeah, so that's market open-ish on Thursday. We're up in here, right? Structure, like even down to pretty much the 2 minute time frame, structure never established any bullish stance. Like not once, and I will change this line from whatever 4 points that it is down to something proper. But we'll see if we follow this down, that never one time did this ever take a bullish stance. And now, oh, come on, you bastard. You bastard. Now I have Bullyberry in my head going, more technical difficulties. Uh, let's see, and then we get that last leg on there. Boom, the big down leg, right? So at no point in time, if you just look at these highs that we formed, at no point in time did we ever set a higher high. Never once did that occur. I mean, you count that one if you want to. Right, we're looking for that higher high. We haven't seen one yet. We got equal highs there. We don't got higher highs there, right? So structure was always pointing down yesterday. It really never pointed up. I mean, shoot, even if we get into, yeah, like even into this area here, like it really just never cracks a high at all with any confidence. I think this was an area I was looking to long yesterday, and I was looking at literally that right there, and I was going like, no, that just doesn't give me confidence that we have managed to flip structure bullishly. Like that just looked pitiful to me. So now, you know, I mean, what's to say about risk management? I guess, you know, I don't listen. I don't know if I can say much more specifically in relation to the fall from the top to the bottom yesterday about risk management, other than the fact that, you know, if you saw something on here, there was some manner of divergence on here, or whatever it was that made you enter a long, then you know, you should only have like a percent of risk in that. You should just, I mean, you know, because you're going to take some losses. You just don't, God, good Lord, don't let it be big. Okay, now I got to make sure I'm looking at chat because I encourage everybody to ask questions. So, weird, I can't get the audio, must be on my side. You may, wrong account, slim. All right, let's see. So considering I don't have a lot of questions rolling in, I do want to talk about, I posted this Coinbase chart and it could have gotten lost in all of the charts I posted yesterday because I posted a lot of charts yesterday. So I want to go out and I want to look at like the weekly chart and talk about some of this stuff. Did you throw me on logarithmic, you bastard? You bastard. First of all, get that off. This kind of looks like a wreck, so let me rearrange some of this stuff. So this hadn't really occurred to me until recently that, you know, we just put in another break of weekly market structure right here, right? We just put in another very significant break of weekly market structure, which has formed a very significant strong low on the weekly. So significant that if we were to lose that, I would be convinced that the market top is in. Now, obviously, it's all the way down at 49K, so I'm probably not going to get a lot of resistance from anybody on that. But it's things that we need to be responsibly talking about. You know, Bitcoin's has hit like $104,000, right? So it's and I'm not saying that there's a top anywhere around us, like in the near future, but I'm saying we have signs printed on the charts now that could help us objectively determine some of this stuff. So it's just, you know, like this was a very significant development on the chart, and I hadn't really stepped out and taken a look at my larger time frame structure in a while, and I just think this kind of stuff is worth talking about. I'm still very bullish. I'm not going to lie about that, because I mean, Jesus Christ, look at these candlesticks, right? Like, how can you be bearish about this? But because we are developing some higher time frame structure up here, it's giving us some great guidelines to be able to go by. For me anyway, it's giving me some phenomenal guidelines to go by. I mean, we have daily market structure that exists above 88, you know, that exists above 90K, if you want to say, like we have have established daily market structure up in this area. Like that's significant, right? Because now we know, for me anyway, that this is a super important low on the daily, man. Like if we lose this significantly, we're going to assume this is a bearish daily candle right here, right? If we lose this significantly, I could see retrace up into here, only to ultimately come back down to a zone like that. So like for me, these are very, very important signals on the charts, because I have to assume that there's a lot of people that hold Bitcoin in this community, and you can't get caught holding a bag that you didn't want to. Now, just because you lose this daily low, and potentially march back down, kind of fill this gap up and, remitigate this range down here. Like nothing about that is bearish at all, right? Nothing about that is bearish at all. All you would be doing and I'm just saying, because this is a significant drop, and I wouldn't want to see anybody not be able to pay themselves some amount of money, or offload some profits to reload later, because that's a significant drop on Bitcoin if something like that were to happen, right? So because of that, okay, and this is what I meant to say. Let's say that this crazy circumstance happens. We lose this important daily low. Maybe we come back in, back test that range, and then we march down to here. That's all that's really going to do at this point is it's just going to form your next weekly higher low, right? Like all that's going to do when you step out to the weekly chart, losing that low, coming back up in here and coming back down into this, all that's going to do is establish even mo better weekly structure, right? That's just going to establish even better weekly structure. So just keep an eye on that. Like to me, that's a super important low beneath us right there. So like so important so that like I would 100% look to long it. I would look to long any sweep of it. If we were to ultimately get back down there, then yeah, I would absolutely look to long that, because the result of a loss of it would be pretty bearish in like the midterm, not like the long term, but the midterm it would be slightly bearish. So I would definitely look to long down there. I thought I just wanted to get that out. Like I posted a chart, but I don't think all the doodle bugs and comments on there really did enough. What just occurred to me? I could have fucking still had the stage running in the background for questions. That just fucking occurred to me. Let's see here. What was that wick yesterday? I thought my trading view glitched. Well, I mean, like it's not that surprising. Let's go back and it reminds me of something. Let me go to the like the 12-hour chart. It kind of reminds me of this, right? Because we were approaching, we had just kind of hitting that all-time high, and we get this sort of large snapback, just wiping out, just cleansing all these late longs, just cleaning all of those up, right? Because the prior all-time high was here, right? And then we kind of interact with that, and then we just have this cleanse of all these late longs right here. I don't think this feels all that different to me, where you come up, we've interacted with whatever 100K for the first time in the asset's history, and then you have this snapback. It just feels like it's meant to cleanse late longs. to force them to sell their longs to the market maker, right? Like that's what it smells like to me. Yeah, that's absolutely what it smells like to me. It feels like it feels like a cash grab. And then it can also it can also create a circumstance in which you achieve 100K and then market maker slams it down below 100K, right? They fucking slam it down below 100K, and now all these people who are holding Bitcoin, who are in profit, because there ain't nobody holding Bitcoin at 100K that ain't in profit, right? They're all going like, shit, man, fuck, maybe I need to take myself some profit, right? And it can create a short trap for people where they see that big candle and they're like, oh man, shit, dude, I might need to cash in a little bit. What's going on here? And then you just sell to the market maker, right? So that's kind of how I feel about that wick yesterday. Oh, yes, great question. So Grim Reaper says, why is the weekly high weak? What makes a high weak? It's a great question, and I'm glad you asked that because that's the exact kind of stuff I want to be talking about today. It's a simple market structure concept. So in the market structure videos I did, the moment that this occurs, and let's say this is the weekly time frame, right? The moment that this occurs, this right here, you have formed a strong low beneath you, and you have formed a weak high above you. An expectational order flow based on this signal alone would be a higher low for a higher high. And that will remain true until you break the strong low. We'll label that. And so we're talking about our weekly BTC structure, strong low. So that high will remain weak and expectationally will get taken out until you break the strong low. And so that this doodle right here, this is the exact stance of BTC right now. This is 49K or 50K or whatever. That's what this level is, and this is what the all-time high is. So this is weak and a weak and targeted level until you take this out. Now, let's say that actually let's delete some of these highlighters here, and let's explain what can change that, right? So what could change that because right now we have to take out 49K or this remains weak, okay? The only way to change that to where it is not 49K that you have to take out is you need to form more weekly market structure. So there needs to be at least 2 bearish weekly candles on a pullback, 2 full bearish weeks, followed by 2 full bullish weeks. These are really shitty looking candles. 2 full bullish weeks, right? And forming a new, then what happens here is if we form more weekly structure up above this previous range that we were in, then your strong low moves to here and your weak high, that's not the line I'm looking for, and your weak high moves to here. And then this remains weak until you take this out. So right now, the current all-time high on the weekly chart, on the monthly chart, and on the daily chart is weak. It is still weak on the daily as well. And it will be weak on the daily until you take out what I have labeled as the important daily low, because that is your daily strong low due to this daily break of structure right here. So until you take this out with a daily candle body close, this will remain to be weak and targeted. Now, if you do take this out with a daily candle body close, then yes, expectationally, your daily time frame should be setting lower highs and lower lows, quite likely until you make it down to here. And until you see this on your daily, like let's just assume that this does happen. Let's assume that we lose our strong daily low and we do make a southern march to form the next weekly higher low. Well, as soon as you see like your 4 hour, 8 hour, 12 hour to daily market structure flip bullish, you're going to run that high. So hopefully that made sense. Let's see here. What else we got? Okay, so we talked about the wick. On what time frame you look for a boss, and on what time frame you look to enter. So Anthony, it's such a good question, man, and I wish I could give you one single answer for that, right? I really wish I could give you one single answer for that, but it all kind of depends on the positioning of everything, right? So let's make some more doodles here, because I have no problem just talking like educational stuff today as opposed to going through charts. Fine by me. So let's say, you know, you're coming up, and we're going to say that this is 8 hour market structure, right? And then you're losing your 8 hour market structure here. So a couple of things happen, right? Like, first of all, I want to redraw how some of this looks. Yeah, I want to redraw how some of this looks. That works for me. Okay, yeah, this will be a perfect indication, right? And then let's drop this high down a little bit, something like this. Okay, now I have lost my 8 hour market structure, right? So in the event that I see something like, let's say I see a break on the 5 minute time frame down here. I'm assuming that break on a 5 minute time frame is only going to bring me to like a lower high on like my 15 minute time frame. I think it's still just going to bring me to a lower high on my 15 minute time frame. God damn, no, this is so hard to explain, dude. This is so hard to explain because the answer to the question that Anthony Soprano is asking changes based on what all the structure reads, right? So if like daily market structure is bullish and I see a 15 minute bearish break, it's not that I'm not necessarily looking to trade that, but I'm not looking to trade that to a new daily low, right? Because I'm looking to trade that God, dude, it's so hard to answer. It's so hard to answer that. It's such a great question, but I feel like it's so hard to answer. Let's see. Let's see. When scalping, do you usually use the 30, 15, and 2 minute structure? So when scalping, Adam Cohen, I typically use the 2 minute structure when scalping. Now, I will. It all depends on what structure is present, right? Like so let's say on your 15 minute, you are coming up like this, right? So your 15 minute is reading this way. So there are 2 bearish candles here and at least 2 bullish candles here and at least 2 bearish candles there. If the only thing on this leg is it reads on about the 2 minute time frame and I see it flip, then I'm targeting this high right here. So I think the best way I can explain it is let's pick a coin. I think this makes more sense if we pick a coin and go through it. Well, instead of asking you guys for one, I'll just grab one real quick. Let's go to XRP and let's go. We'll look at the 4 hour, and then this might make more sense if I just use an asset to explain it with, right? So in the 4 hour, I can see that the structure flow is up, down, up, down, up, and then we're pulling back, right? I need to go up above the 4 hour for the statement I just made. Yeah, we'll use about the 8 hour, right? So I can see that on the 8 hour, we're doing this. So if I know that this is my strong low on my 8 hour, and this is my weak high on my 8 hour, and I am looking for a long back to the weak high on the 8 hour time frame, then what I'm trying to determine is what is the highest valid structure that exists between this point and the lowest point, right? What is the highest time frame structure I can establish in that zone? So we can see that we've got, we're on the 3 hour chart. We've got some 3 hour structure. So if I break that high, I'm very confident I'm coming there. But is there anything else we can go with? No. So in this circumstance, from this high, you come here, here, here. Like it's just how it flows. So you have to break this to target this. Now, what can change that? What can change that is if we interact with this low again. If we interact with this low again, boom, hit this. Now that adds another piece to our market structure that we were missing prior. Now this becomes the what it becomes is it becomes a strong high if you interact with this low here, then that can make that high strong. So then when you break this high in this circumstance, when you've taken this low, now when you return and break this high, you're breaking the highest time frame structure that exists between the high and the low. You are breaking it here. That is a strong indication that price will return all the way up to there. It's the same thing that if we go to like, let's go to, I'll use this example on, we'll look at higher time frame stuff on a Bitcoin chart. I might even be stopped out of a trade. I might be winning a trade. I have no idea what's going on right now. So if we go to the weekly time frame on a Bitcoin chart, right, I'm gonna show you the exact same principle on this, right? So the highest time frame structure that exists between this high and this low is weekly market structure. That is the highest time frame structure that exists. So when you break your highest time frame structure that exists between the high and the low, then this becomes targeted again, right? That becomes targeted again. So it's really about what is the when I get asked this question about like different time frames and what I'm using for an entry and what I'm looking for a boss on, it's the leg of price I'm trading that provides that answer, right? So if I was that's what provides the answer. If I'm looking for a pivot on that, right? Like I'm looking for either the next, let's say we're in a pullback and I'm looking to long that pullback. I need to know what my highest time frame valid structure is inside of that pullback, and when I see that break bullishly, that's when I'm going to enter. So if the highest time, so price is pulling back. Let's use a pencil. Price is pulling back, pulling back, pulling back, pulling back, pulling back, pulling back, flips. If I don't care what time frame this is. If I'm looking at a 1 minute chart in this circumstance, that's a targeted high to me. If I'm looking at a 1 week chart in this circumstance, that is a targeted high for me. Whatever your highest time frame structure between these 2 points, when it breaks, that's go time. Now, there can be slight exceptions to this. So I'm going to draw an exception to it so that we can talk about this. So let's say we're coming up, we have some manner trend reversal and we come down like this, and we come up and we come down like this. And then we come up and we do one of these, okay? Now, again, I'm drawing out my highest time frame structure between here and here. And I just see it flip bullish. in the only thing that now in this circumstance, my highest time frame structure has flipped bullish. So I am looking to potentially run it back to this high. But in this circumstance here, I have unmitigated supply ranges, right? So even though my highest time frame structure has flipped bullish, and that's my signal that it may be time to run it back to this high, I'm going to look at every one of these on the chart as potential, or as 100% as take profits, right? These are all going to be take profits. And any notable high is also going to be a take profit. So this would be a take profit for me. Like I might take profit at that high, or in supply, or this high, I'm 100% taking profit at. In this supply, or inside of that supply, or that next high, I'm taking profit there. But like, so it just depends. Like the best I can tell you is what I'm looking for is if I'm expecting, let me delete all this. What chart are we on? Kraken? Yeah, we can just wipe all these drawings. If I'm expecting we come up, boom, 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 boom. We do one of these, right? And we have interacted with demand, and then we see that this flips. And I don't care if this is on the 5-minute time frame, the 10-minute time frame, the 15-minute time frame, or the weekly time frame, right? When I see this in a logical place to put in a higher low, like I'm looking to run this all the way back up to here, and my take profits are very simple. They are either these highs or the supply ranges that are on the chart. One of the two. Let's pull that high below that supply range, right? Those are my take profit zones. Okay, now I lost track of the chat. Let me get back over into here, and let's see what I didn't what I missed. Okay, so I got that question. Awesome, clear, Adam. Let's see, Adam. We always need to be aware of where we are in relation to higher time frame structure. But I've tied. Yeah. You gotta know where your higher time frame reads, right? You gotta know that. Sometimes in your long zones, all you have is 2-minute structure to work with. But if the 5 is telling the same story, you use the higher time frame. Yes, what he said. Brew, I see most people use fib retracements to enter, but recently most of the assets do not retrace to specific fibs. Any way you use instead of fib. So Grim Reaper, to your fib question, I just don't use them. Okay, for me, I just don't use them. My trading style only uses, like, it only uses candlesticks that are directly in front of me, right? And this is just my trading style. I am not bagging on anybody else's trading style, okay? I'm not bagging on any of it. I will only, so in other words, let's say back here we have like all these higher lows or higher highs or whatever, right? I am not I will not look at volume from this area to this area, because for me, I don't care what was traded over here. This makes no, if there's a lot of volume here or here, or these are adding to POCs, value area highs, value area lows, I don't use that information. I only use what is directly in front of me that has not been interacted with. It is the only thing I use, and I just personally, I just don't use fibs. You'll only ever find 2 things on my chart. You're either going to find supply, demand, or you're going to find a notable high and a notable low. It's the only things I mark, and when we get to a notable high or a notable low, supply or demand, any of those 4 things, I am looking for market structure to shift upon an interaction with one of those. So if we come down into, so say we come down into this demand here, and we're reading our weekly structure, I'm looking for a change in a lower time frame, daily, 4 hour, 30 minutes, something along those lines, to flip inside of this demand, and then I just start targeting all these highs or supply as we go back. If we come up and we interact with this swing high, and we're coming up and say on the daily, we interact with that swing high because this is weekly market structure. And then the daily market structure breaks on an interaction with that high, I'm looking to short. You know what I mean? Like, hopefully that stuff makes sense. Sometimes, okay, so answer the fib stuff. Let's see, what else did I miss? Bullish fireman reach. Okay, so that's fib stuff. Still don't mind a fib. Yeah, I mean, like, and again, like, I'm not trying to hate on fibs. I will tell you, it's a really simple reason that I don't use them. I have the most simple logic for that. My logic for not using fibs is that I am trying to understand everything that's happening with market structure and where all the supply and demand is, and like what is happening on every different time frame. I just simply don't need anything else to think about. I already make enough mistakes in missing something on market structure that I don't want to then also have to think about where to pull a fib from and to, and where it lands, and if I should be paying attention to the 618 or the fucking this or the that. I don't want to also cloud my mind up with what an oscillator is reading, also cloud my mind up with what a fixed range volume profile is reading. For me, it's just a me statement, guys. It's too much information for me. Call me dumb. Don't care. It's just too much for me, all right? I just want to stick to, I just stick to purely market structure, supply and demand. I don't fool with anything else because I used to use Market Cipher. I used to do a lot of different stuff, but there were times where I would get conflicted between what I was seeing on, say, an oscillator versus what the market structure was reading, and I would pick the oscillator instead and get burned. And statistically, for my win rate, using purely market structure only is what made an improvement in my win rate. And when I was able to statistically prove that like growth in win rate, for me, there was no turning back. To me, there was no turning back after that. I mean, it's just the data was in, and I'm like, it's helping my win rate, and it's giving me less to have to think about, man. That's my main thing. Yeah, Grim Reaper, we've all been there, man. You get analysis paralysis, and sometimes it's just hard to deal with. So this is what I want. So let's talk about some more concepts about this right now, right? So for me to enter on this trade now, had I been up earlier, I would have simply, okay, so let's just talk about some things here. Let's talk about a couple of things here. All right, let's just use what's right in front of us. Now, I know that this is only 1 minute market structure, but it's all that existed between this high and this low was 1 minute market structure. And it was kind of piss poor on top of that, right? You just have this little micro 1 minute market structure. It's all you really have in here. I guess we could count that one. It's technically valid. Boom, 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 right? And then, so that's the highest time frame structure that exists between this high and this low, and it breaks bullishly here, right? That's an indication that it wants to run back to here. This is where I will caution you. You need to know what's happening with your higher time frame structure. You need to know what's happening with that. Right? Like, so if we look at our slightly higher flow, what we have is up. Give me my highlighter back. We have this giant up, down, up, down. That's your higher time frame market structure, right? So you haven't lost this low, and you see it starting to flip bullishly here, this is in, so that 1 minute flip in market structure is in confluence with this low over here. So you got to kind of understand that stuff. The other thing that I want to say about it is this. So let's get back down into here, and let's say you were bold enough, and I rarely am on a 1 minute break like that, but let's say you're bold enough to enter this trade. If you see your market structure start flowing up, and it's flowing on that same thing, like the 1, 2 to the 5 minute, and it flips bearishly, you entered on this signal and it pretty much just printed the opposite signal. It's time to close that trade whether you've hit the high or not. That's like you were longing, hold on. You were longing a flip like that. So if it flips right back on you, well, then it's likely coming back to this low, right? So, you know, I will, yeah. So it's important. So like what I was thinking, the reason I was thinking about that is the trade that I took this morning, right? Which is, you know, kind of boring so far. But I saw that it had broke this. When I got to the charts this morning, I was like, okay, so we broke that, kind of remitigated this demand range. We broke this, making a new demand range. And I was like, okay, let's run it back up to this high. Now, if that same flow, let me get all that junk off of there. So that was my justification for it, right? Now, if that same flow flips bearishly, well, then you're likely coming down to your next notable low, which is going to be here. Or, let me get some of these highlighters off of here. Your last unmitigated demand. So we can see that if we measure demand from here to here, you see where it mitigated this, right? So I would not take my demand from there anymore. I'm going to go for any unmitigated demand. So I would start here. Let's get that labeled properly. And then I would also include this section. So that flow that I illustrated that took us to where price currently is, up, down, up, down, up, down, up, and we're right about here. If this breaks, then price is ultimately going to come here, here, or break this low. And so hopefully that stuff makes sense. Sorry, you guys are asking a lot of questions. See, it's so much harder when I have to like look over and read versus if we could just talk to each other, man, that'd be so much better. Okay, Brew, can you explain how to identify correct supply demand zones? When you scalp, what zones are you considering as strong? Oh, I like Bullyberry's input here. An order block with imbalance is created by trapped sellers or buyers, and they become strong places to look for entry on a retrace after a structure break. It is similar to supply and demand. So it's funny because I love how Bullyberry states that right there, and the only change I would make to his statement is an order block to me is still supply and demand. An order block to me is definitely still supply and demand. And it's easy for me to point these out on the chart. It's really easy for me. I want you to, all you're really doing is you're looking for fair value gaps. Okay? You're looking for fair value gaps. And you're asking yourself, where was the entry made that created a fair value gap? The entry was made right here. That is where the entry was made that created this fair value gap. Now, that's one thing. The next thing you want to know is, so we have a sell to buy that broke structure from left to right, or a sell to buy that broke structure from left to right. The only other thing I'm asking, I want to know that did it create a fair value gap or an inefficiency? That is the single most important part. The second single most important part is, did it take you above a notable high or low? And if the answer is yes, then there is demand or supply that exists in that zone. That's all there is to my supply and demand. That's it. That's all. Let me take a random chart. Let's take BOEM. Let's take BOEM and let's go to the 4 hour. I don't think I have a lot of drawings on BOEM. Okay, I do have some drawings, and we can look at them and see that we had a sell to buy that broke structure from left to right. It created an inefficiency in the market that took you above a swing high. Demand exists here. On the 4 hour time frame, when BOEM came back for this demand, it flipped bullishly. Now, if you look from this high to this low, the highest time frame structure valid from this high to this low is the 4 hour structure. So when your 4 hour structure flipped bullishly, you ultimately came all the way up for that high. So that's all there really is for me when I'm picking out supply and demand, is did it create an inefficiency? So we can, and just because it did doesn't mean it's going to work. You're going to know it's going to work when structure shifts. Okay, so let's look at a failed area of supply. So here you had a buy to sell that broke structure from left to right, putting an inefficiency in on the charts, right? That fair value gap that I'm talking about, which ultimately took you below a notable low, right? That ultimately took you below there. So is there supply right there? Yes, 100% there is supply right here. Let's get that labeled properly. Now, when price returns to interact with it, we can see that it does indeed pull back from supply, but it doesn't break anything. It doesn't break anything. Let's go down to a smaller time frame. Let's go down to maybe the 2 hour, because the 4 hour, yeah, we have to find where we have actual structure here. So it caused about a 2 hour pullback to back test the prior demand range. But it did not break the leg of price that came up here. So that supply did something, but it didn't break. We got to go down. Let's go down again. Let's go down again. Let's go to the 1 hour. Right, still not breaking anything. Now we have some structure here. Okay, so now from the low to supply to that high, we go, what's our highest time frame structure? And it's about 1 hour structure, putting your strong low here and your weak high here. So you can see that we interact with supply and we pull back from it, but we never break the strong low. So that to me says we are not coming back down to this low from supply. No, that supply is failing, because you come up and you break structure here, forming a demand range below you, right? Because anytime we put in a break of structure, demand exists there. It just does. It just exists there. So you come back from supply, but it's only to back test your previous range. This high is still weak, and you just return and smash it. Now you have ranged, you initiate, you look to come back down to mitigate to continue. Did we make it back down to that previous demand range in this circumstance? No. But those are some of the concepts for supply and demand. All right, I think I caught up. I think I kind of caught up with everybody. Let me do a time check here. 9:05. I still have some more time. And that's just an example of, you know, grabbing a random chart and taking a look at it, you know, and it's really, you got to understand, this is the principle that I built all of these all these higher time frame spot ideas off of about a month ago. It was really just using similar principles. Well, I got a little wild on ADA. I wasn't using weekly structure there, I can tell you that much. A gold, yeah, so see, like A gold for me, this spot perspective here was because you have your range, you have your initiation. I really don't know what was over here, but it's like I don't know. It just seemed this high was weak. That's the most that I can tell you is that let's look at this closer. Let's look at this closer. Let's zoom in. So once this weekly break of structure occurred right here, right where I was like, okay, you get weekly structure on your side and it's time to run it to the week high, right? But this is an ugly chart. It's an ugly chart, but I guess the better way to look at it is the highest time frame structure between here and here is weekly structure. So when it breaks bullishly, it's time to run that high. And then we could go, I don't know, do we do one on AKT? I wonder what my thought process on AKT was. That one's a little bit of a tougher read for me. I think it was just this break here. ARB. One's a little bit of a tougher read. That one was a PO3 manipulation. Okay, so we had a couple of different ideas in here, okay? All right, we had a couple of different ways that we were approaching that, but that's the stuff. Devin, Spain, thanks, man. It's a nice compliment. What's the easiest way to pick out order blocks? Okay, so let's talk about everybody gets obsessed about order blocks. Okay, I don't want to be a dick. I'm not trying to say that everybody just gets obsessed about order blocks, okay? But people, in my opinion, people tend to get too hung up on them. I'm gonna grab a random chart for an example. Let's find one. Oh, what was the one we were looking at that had that perfect mitigate? Was it Bohm? It was Bohm, right? Were we looking at Bohm? Because I think I can use. Was it not Bohm? Oh, we're on the weekly. Okay, perfect, okay. So this demand right here, okay? So we say, question was, what's the easiest way to pick out an order block? All right, so we have a pullback and we've got an inefficiency that came from it. You're just gonna go up to the highest time frame you can to see if you can see if you can narrow that down to one single candle. So we were on the weekly, right? Were we on the 1 week? No, we were on the daily. We were in the dailies, okay. So on the one day, we have 1, 2, 3 bearish candles. So if we go to the 3-day, not quite, let's go to the 2-day. Okay, so on the 2-day, your order block was here. Your order block was there, right? So finding an order block is this is really all there is to the process. It's going up in time frames until you find one single candle, just one, there can only be one, and the next candle that touches it does not interact with any other candle, right? So in other words, you can see there's a sell to buy, creates an inefficiency, and so this candle only interacts with this candle. No other candles have interacted with this, right? It's only this one. So there is your 2-day order block on Bohm. Here's the thing though, if you were looking for that 2-hour order block to get mitigated, you would have missed you'd have missed about a 80% move on it, okay? Now we're gonna, and this is what I want to do. We're gonna zoom in. Let's rewind the chart back to here. We're gonna go down to the 5-minute. All this is on the 5-minute is simply a sell to buy that broke structure from left to right. Now, there's a lot more inside here on the 5 minute, but your other, you still have this full sell to buy that broke structure from left to right. So I personally, when I go to mark supply and demand, I don't really try and get it down to these single order blocks all the time. I really don't. I just go, okay, we have a buy to sell that broke structure from left to right. Sweet. So I got demand there. Right? And let's get that labeled. Now I know that inside of my demand, I have another boom, up, down, up, break. I know I have another one in here. So I just mark them like that. I don't try and take a whole lot of time to fiddle fart around on different time frames and find these and try to narrow it down to one single candle so I can go, there's an order block. I just look at it as supply and demand, right? If price to go up, price is doing this, and then it does this, and it breaks structure. It literally cannot do that if demand did not exceed supply. Demand has to exceed supply in order for this to occur. There's no other way to make it happen. So anytime I see that, that's demand. I should really probably go back and look at that damn trade. I'm being irresponsible and I just need to like close it out, figure out what the hell's going on with it. Come on now. Is this even the chart that I was on? Where the hell was I? I thought it was that chart. Oh, fucking replay. Dude, where's the chart that I had this TA on? There we go. Okay. Now, so we're approaching target 1 from this trade, and I'm establishing that target because as I discussed prior, let's delete a lot of this stuff over here. So I have supply here, which is like kind of like where my sort of final target is on that, right? Because I have a buy to sell that broke structure from left to right that created an inefficiency. There's fair value gap throughout here that ultimately took us below a external market structure low. So there's my supply. Also have supply here. And there is, but we're trading inside of that supply right now. There's this notable high right here, that one, okay? That's the target. That's the target. Because again, all my targets or all my supports and resistances are either supply, demand, or a notable high or a notable low. That's it, that's all. So I need to be responsible. Bear with me. I need to be responsible because I gotta. I'm not about to lose this trade. Click a couple buttons here. Okay. All right, I have moved that to break even, and I have set my TP for there because I neglected to do that. If supply or demand is mitigated once, is it valid anymore? No. The answer for me is no. No. Once it's mitigated, it's done. So like if we looked at that Bohm chart again, or I think it was Bohm, Bohm. this. So okay, so here's where, this is how I would answer that for you. So this demand has been mitigated. Having said that, there is remaining demand in here. That was that 2-hour order block with imbalance that has not been mitigated. So I would adjust this demand to the unmitigated portion of demand. As long as you can find a like something that's valid. Don't just make shit up, right? I can do this because of this high right here. Because of that, I can reduce that. That probably didn't help. That probably just confused people. All right, I kind of want to. I need a peek at the DXY and see if my thoughts are holding up on this. Yeah, they are. Yeah, they are. I'm not fucking spot on, man. Fucking spot on. Absolutely fucking spot on. Yep, spot on. Fucking feel great about that. Awesome. And for anybody unaware, I'm looking at the deviation of this range high, having put in a daily break of structure. That is the highest time frame structure that exists between this low and this high. This is our only area of demand that holds us back from running that low. Okay, cool. Get that out of the way. Let's, I don't even remember what all we've been looking at lately. I don't really recall, so I want to kind of dig through some of this stuff and see if it pops out. We were looking at algo lately. Okay, so algo ideas from yesterday were if we could return to bullish market structure, long. If not, let's look to hit this low right here, get down into supply. So as this stands right now on algo, this whole concept now moves to here. This is done, never confirmed. Now, if we can come back up out of here and break structure, then I think we can run that high again. So this spot right here is a very logical place for an alert on algo. You will have a little bit of supply that you'll have to worry about on your way up. I'm actually just going to take this entire chunk of it here. We'll get you fixed in a second. Yep. That's where I'm at with algo. That's where I'm at with algo. Yep. I feel good about that. Kent, I'm glad you learned a lot. And for anybody, dude, if I missed your guys' comment, it's nothing personal. It's a lot to juggle between getting all these ideas out, doing TA, explaining things, and reading all this stuff. My brain is only so big. If anybody said anything in comments and I miss you, I appreciate you. If you're still waiting for an answer from me, hit me up in Discord or something. I want to make sure I don't lose you. We'll go check APT. We'll go check APT. I would be more than happy to take a look at APT. All right, so let's get up to the 4 hour here. I got to get this green box out of the way. All right, so on the APT, let's take a look at some of our higher time frame structure, right? So we have a notable range of price, right? And that range of price exists between here and now here. We ran the low of it. Directly afterwards, we broke the highest time frame structure that exists on this leg of price from here down to here, right? So when you break that structure, you have put in demand right there. Get right where I want you. You've put in demand there. We came back and we back tested that demand, and we are heading up. So our next notable place that occurs is going to be right here. Sell to buy, break structure left to right, creating demand. And we have come back and back tested that. And more importantly, that was a perfect range rotation and deviation. I don't know if you see it yet, but we'll hop to the 15-minute and it's going to be perfectly obvious. Your range was here. Just give me regular range. And you pulled the low of the range and you ran the high of the range. Now, currently right here, you have what? Another range, which is going to be from here to here. Now, you are in the premium section of the range right now, so this is a somewhat problematic place to look for a long, but if you follow the leg of price just from here to here, we're going to see that it comes up, down, up, down, up, down, up, down. So there was demand that existed all through this area. There was further demand for the asset that existed right here. That's got a little bit of a mitigation on it. One thing I do see is a little bit of a 1, 2, 3, where all those take each other. Now we are returning off of that to attempt to run this high. See, 15-minute, let me go to the 30. No, see, this is why I don't really love to play around with trying to narrow it down to different time frames. You have a bit of unmitigated demand right here. Oh, get back on there. And now it wants, I mean, did it, so did it actually pull the low this time? That one? No, it didn't. But it did, if we look at it from this perspective, from a more simplistic perspective, it achieved the utmost discount of the range and is looking to rotate back up to here. Why would it want to do that? Why would it want to rotate back up to there? Because it is a weak high. It's a weak high. That high is still weak. Why is it weak? Why is it weak? Because this has not broken any strong lows. It has to break this strong low, or all these highs just, or at least this low. You got to break at least this low to make that strong, that high strong. Until you break something like this high is going to remain weak. And then when we step out on the higher time frames, like, come on, man, like there's no way you're not running the larger range high after a sweep of the range low. There's no way you're not doing that. 100% you're doing that. So proper demand should always have two criterias: boss and a fair value gap. Yes. 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 Just like there's unmitigated demand right here. There's furthermore unmitigated demand right here. Oh, that's not what I want. And inside of that, we're on the daily time frame right now. Inside of this unmitigated demand is a daily order block, right? There is a daily order block right there. But again, if we look at this daily order block, let's do this really quick because this is all about educational purposes today. Let's rewind the chart to there and let's drop to the 3-minute. that daily order block there was nothing more than a lower time frame range that pulled the bottom of the range and broke the high of it. That's all that, like, when you go into that daily order block, that's all that exists in there, right? Which is why a lot of the times I don't really go to the higher time frames, right? I don't even play around with them, because this is already telling me everything I need. I know that there is demand here. I know that there is demand here. We form a range, we pull the low of the range, and we slam above the high. Right? We stall out ever so slightly there, and boom, there is your fair value gap right there. So that's all. Like, you look inside of a daily order block, and that's all there is inside of it. It's not, so that, I don't know, whatever, I'm blabbing now. So that's like where I'm at with, what is this? APT. That is where I'm at with APT. Okay, let's take a look at that Slam Banjo. Let's take a look at that Slam Banjo X. You said XLM, I think. You said XLM, right? XLM. Okay, cool. All right, let's get in here and let's take a look-see. Boom, boom. Let's leave that label on there for now. Okay, so I remember this one. We've got our daily sort of order block here. Okay, so here's where you're at on XLM, okay? The highest time frame structure from this high to this low is basically this. That's the highest time frame structure there, okay? Now you broke that high. And right below you, let's check the 15. Right below you, you have a 15-minute order block with imbalance. Okay, so now what we want to determine is we want to determine the highest structure that exists between this low and this high. So let's drop, it's about 15-minute structure. Let's drop to the 5. Okay, so on the 5, we come up, down. There's your 5-minute break right there. Up, down, another 5-minute break right there. Boom, boom. Okay, so your most local relevant low is this. You could not close a candle body below it. So the structure has not broken bearishly yet. You do have a little bit of a 1, 2, 3, where all these lows took each other. They dominoed. Those positions sold to each other. That's a generally bullish presentation right there. And yeah, it has not broke bearishly yet. It has not broke bearishly yet. And you have unmitigated demand right below you. That's not what I wanted. I wanted this. So you have the opportunity to still, so this is where you have to know, again, you got to pay attention to your higher time frame structure, because I'm sure if we drop to like the 2, maybe we can find the break you're looking at. No, I still don't see it. I still don't see it. Oh, I guess you could look at this, right? You could say, okay, we broke there, right? But your highest time frame structure between this low and this high is like 1 minute, right? So you break it, and yeah, what happens? You run the low. You run the low, right? But the moment that you return above this high right here, the moment you see price run up and break that high there, like, you're going to come for this high. So no, it has not broke bearishly yet. And did you already do Solana? I haven't done Solana. Happy to go take a look at Solana. We were doing more Q&A kind of stuff today, but I have zero problems with doing TA on anything. It's fine by me. It's more than fine by me. All right, so Solana. This was the position we were talking about, I think, yesterday, coming down, running this low into demand, and then flipping structure, which happened right here. When you did that, you flipped the highest structure between this high and this low. What was the result of that? You ran the high. Right? Now, did you get resistance at that high and apparently a more notable high? Yes, you did. You got resistance at this high, right? Now, after an interaction with that high, we flow down and we actually break this low right here. I'm trying not to get this too messy, but we return back down and we break that low. But then you look at, now you go, okay, all right, cool. But here's the thing. You see this break point right here, right? Demand. Okay. Now, look at the structure between this high and this low. What's the highest time frame structure flow? I don't care about the time. I'm not going to look at time frames. It flows about like that. And you break this. So where are you marching towards? This section of supply right here. How is that going so far? So far you have gotten over halfway through that, which is a good look off of this break. That's a good look. You're over halfway through this. This demand may, or this supply may be failing. You still have, let me move this box. Let's just get rid of it. You still have demand existing beneath you here. So until the highest time frame structure of this low to this high fails, then it is coming for what? That high. What is the highest time frame structure of this leg? Let's go to the 3. We can see it flowing on the 3. Your strong low is here on your 3-minute time frame. So until you lose this, and you still have demand right underneath you, because we analyze this leg, which is only 3-minute, but we have larger kind of structure at play here still. So so I'd say it looks pretty good. I'd say it looks pretty bullish. I would say that it quite likely wants to run that high. That's what I would say about Solana. XRP possible breakout. Let's go take a look at XRP. That was mislabeled. Oh no, it wasn't. No, it just was failed demand. That's all. Okay, so the best thing about XRP is having taken this low. In my opinion, that is the best thing about it, is having taken that low and failed to close below it. So right now, for me, for XRP, we're just trading the range of price from here to here. We are above the equilibrium of it. You've got a little bit of interaction with this high right here. Getting a little bit of pullback off of it. Was there a touch of supply left above the high? I reckon there was, yes. There was a touch of supply left right above that high. So we're getting a little bit of bearish result off of that. But the leg that brought us to it, still bullish, right? Still bullish. Still bullish. And has a local break in it. So demand for me, I would mark as this. With this portion right here in the center of it. Now, because this is in the did I say it was, yeah, it's in the premium of this local range right here. You're kind of trading off the equilibrium of it, which I'm sure is probably the equivalent of looking at the POC. Close-ish. That's exactly how I would draw my fixed range on it. I don't use those a lot. You know, I mean, can you look to run something like this maybe? Yeah, that's probably how I would look to run that. But see, I would need a mitigation further down here because that's a 2.79. But if we move it to where price is at right now, that's a 1.42. So I'd really rather see it come back down in and mitigate some of this demand that starts at like, I mean, ideally I want it right here. Get on there at like 2.36. Ideally I want it there. And in the most perfect of world, you'll have some manner of like 1 minute structure that'll take you there. And you'll see it flip in the most perfect of worlds. OP. Yeah, I really wanted to come on and really focus on more of the concepts and do more Q&A, because I think a lot of people, if they don't have exposure to smart money concepts, that it can seem very overwhelming and very confusing. But then for somebody like me who has an understanding of the concepts, it seems like the most easiest thing in the world, right? Okay, so OP is interacting with a chunk of supply that had my radar earlier, and whenever the hell we did this TA. So it is an area to be a little bit of caution, to have a little bit of caution about, because you have done your overall range initiation, but you haven't mitigated any of this newly formed demand, right? You have not mitigated any of this. Most specifically, I would like this last section that created that inefficiency, right? So that stuff remains unmitigated, can remain unmitigated for many years, not the biggest of deal, but you just have to understand that you are interacting with supply. It has had a significant increase in price, 70% up just from the mid of that range. So you have to start looking at these lows and going like, okay, so this low right here is should be a pretty strong low. If we drop to like the 4 hour, yeah, that's a pretty strong low right there. So like if you lose this low, then you are likely coming back down to either run all of those stop losses that exist between here, and likely to pull off of that last piece right there. I mean, like that's just some of the stuff you have to watch for. Now, having said that, it's not doing that, right? Like it's not breaking structure, so we don't have to be all woe is me. We can look locally. And okay, so we form a high, we form a low, we pull the low, we run the high, right? So we got that stuff going for us locally. So that, oh, what button did I just push? Okay, so I just don't love how it's stalling out here. I don't love how it's stalling out here. I don't have to though. Okay, let's get this out of my way. I don't want to look at that. I don't want to look at this. I want to look at this. It's not a ray. I want to look at this to here. Yes, precisely this. Yes, precisely this. Okay, so we see the exact same thing happen again right here, right? We form a high, we form a low. My rule is this. I see a high, I see a low. I'm going to take this simple fib tool and I'm going to draw it from the high to the low. After it puts in its low, if it returns to the 50% mark, I'm going to consider this a range of price. I'm going to consider it a range of price from here to here. Now we can see that after it puts in the low, it comes back to the 50%. And then what does it do? It runs the low of the range. After it runs the low of the range, it breaks structure, confirming demand. You come up on your 15 and you lose your 15, right? You lose it. You're coming up, down, up, down, up, down, up, lose the 15. So likely forming your next lower high on like the 1 hour or higher time frame structure. You're coming back down into demand. Structure flips out of demand. That's the highest structure between this high and this low. So what do you think is going to happen? I suspect you're going to run that high. You have SFP'd the bottom of the range. This level is weak, has been ever since it was printed. Weak targeted level. Can you ultimately get as far back down as here into demand to mitigate it again? Can you form some manner of structure, like 2-minute structure, that takes you down to that and flips? Possibly. If you can come down here and run this low and return and break this high, well, then you're coming for this high and you're coming for this high. Bully Bear, I'd love to do that, man. I'd love to do that. I am on vacation for the next few days, but I would love to do that. Speaking of vacation, everybody's probably rolling. I skipped the gym this morning to come and do this with you guys. As soon as everybody rolls back from the gym, I'm going to be packing up and heading out of town, which is going to happen here pretty soon. So just a heads up on that. I am running out of time. So if any last minute sort of questions and whatnot, let's get those handled. You son of a bitch, you Bitcoin. You see that bullshit? That's my fucking TP right there, you asshole. I think we did Solana. It's a possible breakout. Okay, I think we got mostly everybody's questions. Again, I'm just, hit me up, guys, because it's really run into that time where like my stream could end at any given moment, drop of a dime. As soon as I hear that door open in the front of my house, I'm gonna hit stop streaming. Range base idea on Jasmine. If you hit that low and you see structure on, say, your 5 to 10 minute flip, target 1, target 2. Yeah, it should be fun, Anthony. We're gonna shoot down to Phoenix, Arizona, and go see like a Cardinals game, which is like American football or whatever. I've never been to an American football game. Not really my jam. It's a son-in-law's birthday, so me and my family, his family, we're all gonna go down there and tear it up for the weekend. I'll go right now. I'll go right now. I'll go right now. I mean, you're 15 minutes up here. You're like 10 or am I tripping? No, that's like 1 hour that's up there. Yeah, I get it. I get it, homie. I def get it. I almost feel like I almost feel like, do we have the price label on it? Like, see, bully, for me, that's target 1 46661 off of this break. And then if we break that significantly, you know, get a nice fat candle up there, then I think we can run up and test the supply at 50 cents. So yes, I am with you there. Okay, 15-minute broke bullish, but we can only target the 1 hour supply until the 1 hour breaks. Okay, so let's go up to the one, because I want to see, because I have a feeling you're trying to. 1 hour supply. Are you saying you're targeting this? And then if you get your 1 hour break here, then so is that your local target then? When you said 1 hour supply, I mean, unless you're talking like, I don't know. It's the only 1 hour candle I see that I have a hard time considering it valid supply. I mean, it's inside bar is my issue. It's inside bar. The low of, yeah, see, the high of this candle is higher than the high of that candle, so it's a little inside bar-ish. And we have 2 candles here instead of 1. So I just take, like, I wonder if, yeah. Okay, I'm following you. I just, for me, it's a little inside bar-ish, and with those 2 candles there, it looks a little weakish to me. Let's get down to a lower time frame and take a look at it down on a lower time frame. Yeah, so like, instead of that 1 hour candle for me, bully, I'd probably be here. I'd probably be there. And I mean, like, if I had to really dice it up, it'd probably be this 2-minute OBIM right here. If I had to, like, really dice it up, go something like that. Yeah, maybe something like that. But yeah, I'm bro, I'm right there with you. I see the 1 hour high. Okay, I think yeah. 1 hour high. That's the one I have marked, right? Yeah, 1 hour high. Yeah. Yep. Bum. ARB Ripper. Dude, I'm trying to remember what all we looked at the other day. We looked at. We looked at some odd ones, I want to say. What did we look at the other day? I wanted to check back on those. It was eating peanut goats. That's what it was. Eating peanut goats. Did I put peanut on here? Yeah, so we did get some mitigation into that demand on peanut. That did well. Goat. I don't know if goat ever made it to my watch list though. Goat. No, I don't think really any of the ideas I had hit on goat. Because like the shorts didn't really pan out. We never actually ran that low. Nah, I missed it on goat. I didn't can't claim anything there. How did FET pan out? That was a weird move on FET. You know, we were looking at a long from this low yesterday up to this supply, and then that spike just I don't know, that to me already seemed pre-mitigated. That was a little bit of an odd move, but overall, like, you know, I mean, could anybody have nailed the perfect trade on that yesterday? No, but yeah, overall that TA stuck pretty well. All I'm saying is that even though the 15-minute broke bullishly, we can't target the real high until the 1 hour breaks. But how are you going to get a 1 hour break? How do you plan on getting? So you're saying you got your 15-minute break here, but you can't target the 1 hour high until the 1 hour breaks. Are you then saying that like you want like 1 hour low? You want like an internal break to run you to say, yeah, we're gonna take that. So like you hit supply, get 2 bearish 1 hour, break that, and then you want this high? And while I'm waiting on that answer, we'll go peek at cake and beam real quick. So cake is in. It's in a little bit of supply, but we just have a local range that we've established here. Let's go take a look at that on like maybe the 15. And from the high to the low, we draw the range tool. It retraces from the low it sets to the 50% line. It comes back, it pulls this low. So I would say I mean this is a weak level. Let's not forget that level is weak. And we have pulled the low of the range. So yeah, to run back to the high seems pretty likely. It'd be really cool if we could just break out of this local range right here and back test it. Be cool if we could break out of this and back test it and then look to run it up to here. If you want something more macro, after this supply range and we smoke this high, likely all up until about here-ish, and then beam. You've derailed me now. Yeah, we'll just have to catch up sometime. Beam. Okay. Beam. What do we have on beam? This isn't going to work. Give me like 4 hour. Love it. All right, so we're breaking out of this little local range here. We've left an inside bar 4 hour demand block. Oh, there's the front door. My time here has ended. You all